Hey everybody, welcome to the Bowtie Breakdown. I'm Garry Morin, the Bowtie Guy, and today I am in Pawtucket, Rhode Island at Anchor Financial with my friend Joe Baptista. Joe, thanks for letting us stop in and bring all the equipment today.
Absolutely.
So today I'm sitting with Joe and we're going to learn about what a rate lock is and why is it important. So Joe, first off, what is a rate lock?
What is a rate lock?
What does it mean?
What does that even mean? So with mortgages, everything comes down to an interest rate, right? So what a rate lock is that's us securing the interest rate for a certain amount of time.
Okay.
So it's all based on the time frame that we need to secure the rate, okay? So when you sign a purchase and sale agreement, all right, that's the first step. Before we even get to rate locks, you have to get to that point where you can sign a purchase and sale agreement. There are, I don't want to get off track, but there are ways that you can lock a rate before you have a property secured. But the pricing is so much higher, the rates are so much higher.
It a little bit more difficult because you don't know the price, right?
And you don't know the time frame.
Yep.
So there is a way to lock loans on a TBD property, to be determined. But
that would be like a situation where subject to seller finding suitable housing where you don't know when you're going to close.
You don't know when it is, or when you're going to find the house, or when they're going to find the house exactly.
Yep.
So because even where someone's not in contract yet, some people will say to us, hey, we want to lock in at today's rates, but we don't know if you're going to find a house tomorrow or 6 months from now, especially in this market.
Yeah, right? Oh yeah, it could be short, it could be, who knows.
So generally what we do is we'll pre-approve you based on the current market, and then we're going to keep in touch with you, and as rates change, we're going to update your pre-approval. A good realtor like Garry is always going to make sure that the
most
pre-approval is updated. So that's, you kind of float during, it's called float. That's you're floating like in a raft.
Because interest rates almost change daily, if I'm not mistaken, right?
And that's the crazy thing, right? And you don't want to drive yourself crazy with this stuff, but if you ever follow the 10-year bond, right? The 10-year treasury bond, that's kind of what regulates mortgage rates.
Okay.
And as you see that go up and down, that kind of will tell you what rates. And it's all based on the economy. As the economy gets better, rates will change.
Should change.
Right, exactly. So believe it or not, a better economy is kind of, it's bad for rates, because as things are chugging along, they try to increase rates to try to slow it down a little bit.
Yeah.
So believe it or not, as far as rates,
which is why we got down to like 2% when the economy was very bad.
You nailed it. So it was the pandemic that really caused that to happen. So the government need to stimulate things, and that's the way they did it, was to bring things down. In my opinion, in the end, they brought them down too low because now we're all kind of paying for it.
Yeah.
But they had to do what they had to do in order to keep things moving. But if we could go back in time and lock those rates, then we'll be all set, right?
It would be a line out the door. So when it comes to a rate lock, that essentially doesn't take place until you said a purchase and sales is signed or the loan application is submitted.
Yeah, good question. So it's really not going to be at the time of loan application because we don't have the property yet.
Oh,
so
gotcha.
Until so I'll lock someone once I know like an offer's been accepted.
Yep.
And we can.
That's why as soon as I get like any kind of paperwork, we send it over.
Send it right away.
Right away.
And we as brokers, one of the beauties of being a broker is that we've got several different banks.
Yep.
So we can lock it with Bank A, and if the market changes or whatever, we can switch it to another bank.
Oh, okay, so you can do that.
Yes, absolutely. And you can always do what's called a renegotiation if rates improve with the existing lock as well. So once you're locked in, it's not the end of everything.
It helps you if the rates go higher,
right.
But if they go lower, you do have an opportunity to kind of renegotiate.
To renegotiate, and I call it a safety net. That's I probably didn't come up with that, but it's it's kind of a safety net where you want to make sure if rates increase, I'm not coming back to you and saying, hey, well now I'm sorry, it's it's this much higher and your payment goes up that amount. Surprises are good for birthdays, not for
exactly.
So so we the minute we get you into a purchase and sale agreement, or even though we know that we have an offer accepted, we're going to lock you. So locking, right? What is that, and what does it even entail? The lock is based on how long we need to close the loan.
Now, is there? Say it's a 30-day closing. Do you go right up to closing day, or do you go past that?
So you always want to go a little past that because you
that's why I'm asking the question.
Title challenges come up. Moving companies
something could come up.
So we always with most of my lenders, we're able to get a 10-day free extension.
Okay.
So for the most part, with most of our lenders, just because we get a good track record and our pull-through ratio is good. But but you want to lock for as short a time as you can, because the longer you lock for, the more expensive it is, or the higher the rate is.
So there are fees associated with rate locks?
Exactly.
Okay.
So, and it all comes down to what we call the pricing. So we try to do all our loans as much as we can with no points. So meaning that, you know, we're going to get our compensation from whatever bank we place you with.
Yep.
So if I give you to Rhode Island Housing, if I give you wherever we go, they're the ones that compensate.
So the rate lock fee is a fee to lock the rate, not a lender fee.
Correct.
Okay.
It's a fee to lock the rate. And you want to have that rate lock where you're not paying a premium for it. You don't want to have to pay extra.
Right.
Right. That's the key. You know, and I watch these transactions like they're for my own family. So no one's paying extra on my
We want people to spend as little out of pocket as possible.
So, you know, so if you plan it right. So now if we know we have a 90-day closing, so, you know, a couple people have to sell houses, you know, and that happens all the time.
Yep, suitable housing,
suitable
whatever
housing.
it is.
If we know we get a 90-day closing, we can lock it there for that long.
Okay.
But we may, as we get closer to, we'll lock it for the 90, but then as we get closer to 30 days, we might switch it from that bank. You know, hopefully all my banks aren't hearing this. But yeah, no, we'll keep this in the personal page. But no, hey, listen, it happens. It's they understand.
It's a part of doing business.
And as a loan gets pulled from them, they get a loan from someone else too. So there's plenty of efficiency.
And it's not like you leave them high and dry in the ocean. You're coming back to
We're coming back. You know, it goes from one to the next. And as rates improve, everybody's pipeline just kind of switches from one bank to the next. Everybody still gets the same. It just switches around. If in the end the consumer and the borrower comes out ahead, that's the way it's supposed to be.
Good.
Right? When banks compete, the borrower wins.
Yep.
That's what it's supposed to be. So to simplify the rate lock thing, I know we kind of got off on a couple different tangents, but a rate lock secures your interest rate for a length of time from your purchase and sale agreement until you close.